Mortgage rates falling fast. What's out there if you're shopping for a home loan? This is Now You Know. I'm Rob Snow.
All the news you need to know.
This is Now You Know with Rob Snow on News Radio.
The U.S. Federal Reserve Board cut interest rates this week by 50 basis points, and that's a big deal because those interest rates set by the U.S. Fed go a long way to determining mortgage rates, which are finally starting to go down. That will be welcome news for those looking for a home loan. So what's available on terms and rates? Clinton Wilkins is back from the Clinton Wilkins mortgage team in Dartmouth, Nova Scotia. Good to hear from you.
Thanks for having me, Rob.
How much have rates come down?
I can tell you, obviously, variable rates have continued to go down, Rob. They've been very, very popular with borrowers. Borrowers have a very optimistic outlook now that the rates are going to continue to go down really for the next 12 to 18 months. So a lot of borrowers are moving towards a variable rate mortgage. But consequently, the fixed rates have also started to go down. Bond market has had some pressure, and we are seeing fixed rates that are edging closer and closer to being in the 3% range. Still, most fixed rates today are starting with a 4, but much better than it was 4 months ago or 6 months ago or a year ago. We were at upwards of 7% before the rates really started coming down.
So given what we're hearing from the central banks, both in the United States and in Canada, what economists are saying, you would expect further declines in mortgage rates. Yes, Clinton?
I would 100% think that rates are going to continue to go down. I guess the one question that we don't know, Rob, is how quick are they going to go down? And for a borrower getting a mortgage, I think the right time is the right time for them. I will say to you that there are some very good deals in terms of pricing right now. We need to remember that the Big Five, they have their year end at October 31st. So as far as mortgages being on sale, with an air quote, there certainly is some very aggressive pricing if you can close very quickly and before October 31st.
Okay. The rates where they are now compared to, say, where they were at the beginning of the year, is that sparking more interest from home buyers now? What's your experience?
Certainly a lot of optimism. And I think there certainly is more interest across the country. I can tell you, still in markets like Ontario and BC, things are still tough. The market's very, very soft. But in Atlantic Canada, where I'm doing business, and in the prairies, the market's been very stable, even with the rates being, higher. There's still people are doing transactions every day. But when the rates come down, there is a lot more optimism in the marketplace. And I think specifically from first-time home buyers, those folks were really sitting on the sidelines. In reality, the last 12 and 24 months with the rates being higher, they qualify for less. But there's certainly more first-time home buyers entering the market. And obviously the news this week from the federal government with the rules changing on December 15th, that's providing even more optimism for buyers just looking to enter the marketplace.
Yeah, I want to talk about that in a minute. But what I want to get at now is what are popular products for people? What are people inquiring about with you now?
If we're talking about a high ratio mortgage, I think there's 3 most popular rates. I'll still say variable is very, very popular, and it would be more popular than it was even a couple of months ago. There's still a lot of popularity around a 3-year fixed. And for a 3-year fixed, we're looking at, in terms of a high ratio mortgage, somewhere in the low 4% range. So I think if you're getting a rate somewhere in that 4 to 9 range, you're doing pretty good. But historically, Canadians love to take a 5-year fixed. And that's what we're kind of trained to do, and that's what a lot of borrowers are still asking for. And I think for a 5-year fixed with a high ratio style mortgage, you're still looking in that low 4% range. I think you'd be somewhere around 4.34, give or take, just depending on the institution and when you are funding that mortgage.
So high ratio meaning you need the mortgage insurance, right?
Correct.
Less than
from
20%
the Canadian
down.
mortgage.
Okay.
Correct.
What if somebody is putting 20% down and they don't need the mortgage insurance? What do those rates look like?
I think if you're putting down 20% or if you're doing a refinance, the rates would be somewhere in about 4.5%. So we're going to be, again, plus or minus It'll be depending on the amortization. Typically, to get better pricing, a 25-year amortization or less, you're going to get the best pricing from the institution that you're going to do business with. There's a lot of variety out there, Rob, and I would say the differences with mortgages are more now than they were before. And I think that's really why it's so important for any borrower to seek the advice of an unbiased mortgage professional, especially in these times where the rates are just so vast between different lenders. But even the products, there's a lot of differences, just even due to the pricing and options that are out there.
Okay. I've taken a lot of calls. We were talking about real estate, housing affordability. You can imagine it's been a very hot topic. And I've taken calls from people who they look at the Americans and they're kind of envious because Americans can lock in at the same rate, never have to renew for 30 years. Mm-hmm. And they do, some of them wish, gosh, I wish I could do that here. Do you have, I guess the longest term is 10 years in Canada. Do you ever get people opting for 10 years?
Not very often.
Not very often, no.
The reason being is it's a long commitment. And in Canada, I think we have commitment issues around mortgage lending. Historically, borrowers are breaking their mortgage somewhere around 40 months. So even those borrowers that are taking a 5-year term, which is 60 months, are usually breaking their mortgage early. That's why the 3-year has been really, really interesting. There's been a cultural shift. I've been doing this almost 20 years, and we've done over 6,200 transactions. And the bulk, I'm going to say 90% plus, were in a 5-year fixed or a 5-year variable. So these shorter term mortgages certainly have become more of the fashion of the day. But I think it might be very prudent for borrowers just knowing that so many people do break their mortgages early, and right now still around 40 months. Now, borrowers are holding on longer to their mortgages than they were even 12 months ago, just with the rates being high. I think people are being more mindful around breaking their mortgage early, especially if they were in one of those very low fixed rate products. They're really trying to hold on for as long as they can to get the maximum benefit out of that term.
Okay. So finally, what is your reaction to the new rules around 30-year mortgages and mortgage insurance announced by the Minister of Finance this week?
I think it's very exciting. Let's think about Ontario and BC, where a majority of the homes are over $1 million. Borrowers in those markets needed 20% down plus to be able to qualify. Now, starting December 15th, they can get a high ratio mortgage from the Canadian Mortgage and Housing Corporation, Sagen or Canada Guarantee, for a purchase price up to $1.5 million. I know some of our listeners across the country would be surprised to know that a first-time home buyer may buy a home at that price point, but in many markets across the country, real estate obviously has continued to go up, but the rules have not changed. So I think it's going to be good for first-time home buyers. And to recap, they'll be able to get an amortization up to 30 years on a high-ratio insured mortgage. So this is the first time that these rules have really softened since they were tightened up to really preserve the Canadian real estate market. I think it's going to be very interesting. I think some people from the outside looking in think that it might be inflationary, where it's going to create even more demand on the marketplace. But in many areas across the country, the demand for real estate really has gone down with these rates being higher. So I hope that with new supply coming on board, it will enable more first-time home buyers to get into the marketplace. I think with the cap being $1.5 million and the amortization being up to 30 years on a new home and on real estate and on resale for first-time home buyers, I think that'll be really positive. But also for those borrowers that have purchased a home in the past, they can also qualify for the $1.5 million cap, and they can get a 30-year amortization as long as it's a new construction property. So there will be a few caveats there. And again, it'll be important to seek the advice of an unbiased mortgage professional just where there are so many changes. And if you think that's something that's going to work for you, I think it'd be interesting to see getting a pre-approval today and what that looks like. And they could almost run what the scenario would be again after December 15th.
Okay. Well, you're going to have a lot to talk about this weekend on Mortgage 101 on 95.7 News Radio in Halifax. Look forward to it. Thank you.
Thank you very much. Have a great weekend, Rob.
Yeah. Clinton Wilkins. From the Clinton Wilkins Mortgage Team in Dartmouth, Nova Scotia, I'm Rob Snow. This is News Radio.